Welcome back. Tech stocks driving the S&P 500 today to a new intraday high yet again. Our next guest says to stick with those winners in the second half of the year. Joining us now at Post 9's Michael Bapis of Vios Advisors at Rockefeller Global. Welcome back.
Great. Thanks.
So you still want to ride this winning trade? Why so?
Look, I just think, again, technology is changing everything that we have. The metrics have actually changed in the way we evaluate jobs. I think people are trying to make sense of how technology has changed our world from the last 40 years and what it's going to look like in 40 more years. And the next, big topic is AI. Are jobs going to be replaced? Is it just going to be different jobs that are, reinvented? And I think you're starting to see the labor markets try to begin to figure that all out.
You want to pay a price, though, right? You look at the run that these stocks have had. You could show year to date, and certainly off the bottom, tech has led us back. With that, valuations you can see it from the low, right, in April. As those stocks have gotten a huge run, their valuations have gone back up to the point where some say they're just too expensive.
I don't think technology will ever be too expensive. I think in the current environment we're in right now, you're going to always need it. You're going to keep reinventing people with technology. You're going to keep reinventing jobs with technology. I mean, just look at our whole world and the way we live. I mean, the devices we have, our cars, everything we do in today's world revolves around technology. And now that AI is coming on, you're going to see how is that going to affect the labor markets? How is that going to affect jobs? People are going to have to reinvent themselves. People are going to have to reinvent roles in companies. And that is just going to drive technology. I mean, I don't see how it slows down for the next 5 years.
In the notes today, you say, as we approach the mid-year, uncertainty is at the top of investors' and clients' minds. I almost feel as though we're making the turn into the second half. We have more certainty at this moment, or certainly a lot more than we feel like we had just a few months ago. Don't you feel like the picture's getting a little more clear?
I agree. It's getting much more clear. I still think you're going to have, the rotation from growth to value happened a little quickly, and that's what drove the valuations down on the tech companies. But you're going to see a lot of these companies that haven't moved in 5 years because of the tech driving the markets. You're going to see them step up and start to make money as well, especially if rates start to come down. The financials are going to outperform. You're going to see pharmaceuticals. I mean, we're more independent on pharmaceuticals than we ever have been as a society. The baby boomers are getting older. There is just more technology around pharma. And so some of these sectors that haven't really moved are going to ride that technology wave as all of these start to move higher.
Oh, so you agree with some of the folks that we talked to at the top of the show, this big broadening trade that you think is going to happen between now and the end of the year, that it's not going to be so top heavy? I mean, in tech and some of the bigger stocks, tech, industrials, financials.
Yeah, look, I think they're going to all drive it higher. You're going to, they're shrugging off the employment data today. Let's see what happens Thursday, and let's see if it becomes cyclical. If that becomes cyclical, then that is something to watch and to be worried about. But currently, the earnings are still strong, and last quarter, companies had really good, strong earnings. Third quarter, fourth quarter, if that keeps up, you're going to see the markets go higher because they'll figure out the geopolitical issues. You're starting to see the trade tariffs start to get figured out. You're starting to see, they'll figure out this bill that they're trying to pass or don't pass. And all of that stuff is noise that's important. But the refocus on earnings and the refocus on where the markets are moving is probably the most crucial thing to watch, along with the unemployment.
Do you need the Fed on your side?
I think you do. I mean, I hate to say that cliche.
You need them to cut rates this year for your story to work?
Yeah, I think you do. I think you're going to need them not only for inflation, but also to help banks and to help productivity in financial firms.
How many cuts do you need?
Look, I'd like to see at least one and maybe up to three. I mean, I just believe that we're in an environment now that any negative movement will derail something more quickly than any positive, rate cut.
All right. Well, Goldman's gone up to 3, so maybe you guys will be right on that. We'll talk to you soon. Thanks
I appreciate it. Thanks for having
Michael
me.
Bapis.
Take care.